Here's what to do if you miss a tax payment. Now, today I was speaking to two different clients that have missed payments of tax to the IRD on the correct due date. Now, both of these situations are very different. So as I sit here in the old work from home office and reflect on these, I thought this might help a couple of you people out there as well. So let us know if you've got other questions that you would like to know or hear about. But let's get started on a little bit of tax chat. So the first one is the fact that the business owner simply overlooked their payment for tax at installment number 2. This is a profitable client each year, and at installment 2, they just simply forgot to pay, and then later on, after the due date, so it was the 15th of January was the due date in this example, they made a payment because they thought, they saw with the IRD notification that they hadn't paid enough tax by the 15th of January, so eventually paid it. But that payment is now late, so they paid their correct installment on the 28th of August. They've missed January by mistake, and then they've made their May payment as well. But effectively, the IRD aren't going to be too happy that that payment was paid late. So they could potentially be up for interest and penalties. Now, the IRD, you may write to them and say, hey, this was paid late. Can you please give us some good grace and apply it as if it was paid on the correct due date, etc. But in this specific example, they still had a little bit extra tax to pay. So what we will most likely do for this client is use tax pooling, and that's really what I want to use this example or story to teach you about. So we'll go to a tax pooling intermediary who have credits of tax payments that were overpaid on the correct due dates, and we can leverage off of those. So when I say we, I mean all business owners. We're business owners too, and you probably are as well if you're watching this. So the tax pooling intermediary will allow us to buy the payment as if it was actually made on the 15th of January. And so then the payment that they made after that, so the client paid after that, will be used for and be allocated against their 7th of May payment. Now, there will be a slight interest component that they'll need to pay the tax pooling intermediary, but that's the cost of doing business and the cost of doing things and being a little bit late. But that's tax deductible, that interest as well. But it's better than paying penalties to the IRD, which aren't tax deductible and can rack up very quickly as well. So there are a number of different things that you could do in this situation, but this is what this client is going to do because it's simple for them. It's simple to organize with the tax pooling intermediary, and they can carry on with building out their business and running it and making it even more profitable and focusing on what it is that they want to do. So the point being that just because you did make your payment late doesn't mean that you're always exposed to interest and penalties. There may be a way that you can mitigate or reduce these. So if you don't understand tax pooling, then you probably want to dig out one of our podcasts around tax pooling, or do some Googling or some chat GPTing, or look up the likes of Tax Traders, TMNZ, PwC Tax Pooling Solutions. Go and do some research. These short snippets are designed to teach you something quickly, and you're not going to get really in depth to it. You might want to ask your accountant, but we're introducing you to some of the things that you would like to know, or we would assume that you would like to know if you're a business owner. It's smart to know these things because they're really valuable, and we're going to keep these lessons to under 5 minutes. So I better get into the next one. So the next client, unfortunately, we've picked them up from a previous accountant, and which is great for us, but they're behind on taxes and just don't have a good handle on it. So unfortunately, we will not be able to tax pool some of that because A, there's too much cash flow pressure to go away and do that, but secondly, because the due dates have passed for being able to use tax pooling. So for them, they're going to have to set up an installment arrangement with the IRD and keep the IRD happy so that the IRD know that they're committed to clearing that tax and slowly chip away at doing that. The tricky thing about paying historic tax is you've then got to stay with your current tax obligations and try and clear down the prior ones at the same time, so it can really impact your cash flow. But the point being of that story for you there is that if you get behind on tax, whether it's PAYE, GST, income tax, whatever it is that you get behind on, don't bury your head in the sand. Reach out to the IRD, tell them the situation, look to set up an installment arrangement, ask them what solutions they may have for you, because there's nothing worse than eventually them getting in touch and controlling the process and you looking like you've done nothing about it. So if you ever do get behind on tax, make sure you reach out to your accountant. This is the key lesson here. Reach out to your accountant and see what options you have. It might be an installment arrangement, or it might be something like tax pooling. Hope that helps you.